Hi, this is Kerry Artek with Wicked Stocks, bringing you kind of random analysis, nothing regular about the West Texas Intermediate Crude analysis or Comex Gold. I've done videos on both over the months. This video actually did go out to premium subscribers to wickedstocks.com earlier, and then we decided to make it just available to everyone, including our YouTube channel, because of its relevance in terms of the inflationary element that both can be an indicator of, and how it may impact stock prices as well. So all of them are weekly charts. Oh, and before I jump into the charts, just want to ask you to please click like if you like this analysis. That does help us out a great deal. And of course, subscribe to the Wicked Stocks YouTube channel. It'll provide you notification when these kinds of videos come up. And I'll also ask you to become a wickedstocks.com premium member, which starts at $25 a month and ends at $50 a month. 25, 40, and 50. Those are the three levels. You may already be aware of that, but I invite you to become a wickedstocks.com premium member as well. You'll get a lot of good analytical information on a regular basis. Anyway, let's take a look at the charts. I'm starting with crude oil. They're all weekly bar charts, by the way, and these are futures instruments also. So this is West Texas Intermediate Crude Oil Futures. Presently, the March 22 contract. We are rolling over the next day or two to the April contract, FYI. So, if you listen for West Texas Intermediate last prices on a day-to-day basis and you pay attention to that, just know that these charts, these numbers, April will inherit, if you will, over the next couple of days. And it's actually relevant right now because April is a couple of dollars a barrel lower in value than March. And that's not common. Oftentimes they're just a few cents apart, maybe a half a buck. They're about $2 apart right now. And the only thing I can read into this is the sort of the short-term scare that's occurring right now with regard to Russia and Ukraine, and that it may actually flesh out perhaps as we continue over the next couple of months. But that's as far as I'm going to read into this. Let's take a look at this chart. If you're a regular Daily SPY or Daily Triple Q follower, you're probably familiar with this chart. I've been showing it the last couple of weeks. This is a big area that crude is presently testing. And we did push through this area, have actually quite a bit over the last week or two, but we have not yet settled above this zone at the end of any week by a 1% margin, which is my requirement for long-term buy and sell signals. Last week, we settled above this area by 4 cents. That 92.98 speed line was 93.06 last week. We settled at 93.10, and now we're well below this area in the 91 handle. And we're ready to roll to April here any day now, which is in the 89 handle. So this area is, for all intents and purposes, holding as a long-term ceiling. It's been an objective now for some time over the last few months. And it can, as I've been telling my daily crude oil subscribers, I have a daily West Texas Intermediate crude oil letter, that it is an area that can contain annual highs. And from here we can fall off into the 60s, which I'll show in a moment. But I just wanted to point out that if we do close above this 92.98 level by a 1% margin tomorrow, I'm recording this on Thursday, so on Friday, February 18th, if West Texas Intermediate closes at 93.91 or higher, which is a 1% push through that 92.98 area, then we do indeed have another meaningful buy signal that should yield 115.03, $115 a barrel over the next 2 to 3 months. It could be much sooner, depending on the facts that might support this, i.e., a war between Russia and Ukraine and NATO and so forth and so on. So that would be the target. That's an inflationary element. I can't imagine that being very bullish for the stock market. That's an understatement, of course. I think if this were to occur and we were to get follow-through buying, I think a mere settlement on Friday, February 18th, 93.91 or higher, West Texas Intermediate crude would be a bearish indicator for the overall stock market, at least near term. Now, on the other hand, as I say, we are testing this area, and if we continue closing below it, and it looks like we probably will on Friday, unless all you know what breaks loose over the next 24 hours in Ukraine. So another weekly settlement in this zone, not up beyond the 1% margin, will keep the 60s in reach. And by that I mean these rising channel bottoms that are presently at 60.48 is the base, and it begins really at 68.68. So that's a zone that I would expect over the next several months following this test of the 92 handle long-term resistance. So it could go either way here now. And with us rolling into April here, I'm thinking Friday may actually be the day, uh, that we actually do officially roll. So I'm going to say it's highly likely that we will roll at or below that 92 handle resistance, and that will keep us in reach of the 60s, if you will, 60.48 to 68.68 over the next 2 to 3 months. Is that deflationary? No, but it does mean that things will be a little more affordable. Inflation will not be so poignant, such a threat, at least from the petroleum products perspective, which is a big part of our economy. So that kind of rounds it out for crude oil. It's a bit of a repeat of what I've been saying the last couple of weeks. I'm going to move on to gold now. This is the Comex Gold Futures chart, presently reflecting the April contract, which is the lead contract. They're all weekly charts. And so you can see this channel bottom. I also have a weekly gold video that I put out to my commodities subscribers. Basically I've had RTAC Advisory Incorporated since 1996. I'm a commodity trading advisor. I have been for 25, 26 years, and that's really been my core business until the last couple of years, year and a half or so. We were sort of venturing into wickedstocks.com. And so that's a whole new thing for me, really. I mean, I've been analyzing stocks really forever and trading stocks in my own portfolio using the techniques that I do show in the wickedstocks.com and on the wickedstocks.com YouTube channel. So this is a channel bottom in Comex Gold, 1782.5 to 98.6 this week, rising ever so gradually. You can see that we've been testing it the last few months, and I've been mentioning to my subscribers that holding above this area will keep the more meaningful ceiling of resistance presently at 1926.9 to 1937 even. Now 26.9 is more significant. It is the horizontal structure, stretches over a year of trade, about 12 months of activity here. It is a consolidative base. You can see a rounding bottom if you look, coming off that August 28th, August of 2020 high. If we push through this upper area, 1926.9 to 1937 even this week, and it could happen perhaps. We've had a decent strength in the gold market over the last couple of weeks. If we do close above it, we have a significant buy signal that should then play out, I think, not only into the second quarter, in which case I would expect within 2 to 3 months or less, the 2105.9 extreme channel formation, that would kind of complete the saucer. But honestly, I've been telling subscribers, and I still think it's true, that you need to respect the ability for gold to sort of take off on another significant up leg that could play out over the next year or two if we do close above that 1926.9 horizontal channel resistance. This is a bigger picture of it, and this shows gold market going back to the early 90s. And you can see that 1926.9, that 1 year of consolidation at the base of a move, turning back up, closing above 1926.9. Not a stretch of the imagination to see another significant leg up. That first green arrow that goes back, I think that's the 2018 low to the 2020 high, that was about 2 years, and gold rallied about $1,000 an ounce. That first green arrow represents that. And so closing above 1926.9, I think it's actually realistic. I'm not going to go out and say I fully expect 25.85, but I do think if you're a long-term gold market trader or investor, and we close above 1926.9, I think you can play the long side aggressively. Now, on the way up, you need to give respect to that 2105.9 area because we could quite easily top out there for a month, 2 or 3. But I think as time plays out, it would be resumption to the upside. Closing above 1926.9, once again, I do think the 2500 handle in reach over the next 18 months or so, I would say. Could be sooner, but I think over the next year, year and a half. And that is, in fact, an inflationary move. No doubt about it. It would reflect continued inflation in the economy, and I think you could use this as sort of a leading indicator for whether inflation is going to be, how should you say, endemic to the U.S. economy or not. Right now, the jury is still out. We're still in this consolidated framework below 1926.9, and we can quite easily fall back to the 1782.5 to 98.6 region over the next few weeks, perhaps, where we could bottom out on a monthly basis and then turn back up into the 1920s within a month or two of that. Now, I will mention that if we do close below 1782.5, and it certainly doesn't look likely this week, then I think we've got a meaningful sell signal. Our initial stop, it could be as quickly as 3 to 5 weeks, couple of months, I would say, 1666.8 roughly. That is a combination channel bottom, and it's also roughly consistent with the low area over the last year. I think we get a nice bounce off that. But I think after all of this consolidation, closing below 1782.5, I'm kind of swinging for the fences here. I think that we could continue eroding in price in Comex gold futures, the overall gold market, into the 1500 area. Over the following, it could be as quickly as 3 to 5 months, could take the better part of a year, but I wouldn't be surprised that if we close below 1782.5, that over the following 5 to 8 months or so, we could continue eroding all the way into the 1500 handle. You've got a combination rising two-thirds speed line at 1506.9 and a descending channel bottom at 1559.9 that is based entirely on this week's high. So that 1559.9 is sort of a tentative support because it will change each and every time we put out a new high. And so, but for right now, if the high of the week is in and we fall off from here, then you've got the lower half of the 1500 handle as a possible 5 to 8 month objective if we were to close below that 1782.5 area. I think that kind of rounds it out. Please click like each and every time you watch any YouTube analysis by wickedstocks.com. Become a subscriber to the Wicked Stocks YouTube channel and consider becoming a wickedstocks.com premium member. We have a 7-day free trial. Cancellation is allowed at any time. There are no long-term commitments, so you could try it for a month, 2 or 3, and bow out if that was your inclination. But I suspect that if you do become a premium member, you may just stick around a while because you'll be fed a lot of good information like this. And that is all I've got for this particular video on West Texas Intermediate crude oil and Comex gold futures. You have a great day. The daily video you just watched will require a paid subscription to wickedstocks.com beginning Tuesday, March 1st. Become a wickedstocks.com premium member to continue receiving our daily SPY report, our daily Triple Q report, our weekly DIA, IWM, and Bitcoin reports. Monthly subscriptions start at $25 a month. If you're not ready to become a premium member, I encourage you to become a basic member for free, which will alert you once these analysis videos become part of our paid subscription plan on March 1st. We will continue to offer free and valuable content on YouTube, though it will not include the series of videos mentioned earlier. We hope you become a wickedstocks.com premium member. We offer a 7-day free trial and cancellation is allowed at any time.